Supermicro has been one of the most talked about companies in the AI infrastructure space, but not always for the right reasons. Their revenue growth has been explosive, but their margins have been declining. AI demand is still in the early innings. Training large language models requires massive compute. Inference, running those models in production, will only increase as more applications come online. And Morgan Stanley believes that around 3 trillion worth of data centers are going to be built out by 2028 alone. Supermicro has increased its revenue by 50% in 2025 to $22 billion. And they have also increased their revenue guidance for 2026 by $3 billion. So they are now expecting revenue to be at least $36 billion. And if we fast forward to 2027 and believe that they can deliver another 50% increase in revenue, then we would be around $54 billion. Jensen Huang highlighted something very important the other day in an interview. Basically, the rack architecture of their new chip is going to be the same as Blackwell. So the complexity that caused a lot of delays and issues during this transition should not happen again. This has huge implications for Supermicro. First, R&D costs should be lower than for the previous product cycle. Second, it took them a lot of time to optimize those racks for the Blackwell chips. So their time to market should be faster and more straightforward when Vera Rubin is launched in Q3 2026. High level, this should be good for their margins. There is a lot going on in the market. Circular deals, acquisitions, and government investing in public companies. For example, the Intel deal they made a few months ago. OpenAI, Google, Meta, Amazon, and NVIDIA are buying stakes in companies. NVIDIA bought a stake in Intel to develop chips together. They have also invested $1 billion in Nokia to work on 6G. But then they also invested $10 billion in Anthropic with Microsoft, valuing the company at $350 billion. They are clearly building a wide-ranging investment portfolio. And they can easily do that because their profit margins are great and they are throwing off a lot of cash flow every quarter. So the real twist would be if someone would buy a stake in Supermicro. It is an essential player in the AI build-out, and it also has strong ties to NVIDIA. The market cap is peanuts compared to the big players, so it would be easy for them to get in. NVIDIA is expanding its portfolio in every segment beyond those so-called circular deals. So it would be interesting to see if there is going to be some kind of a deal in the future. They are already working closely together on so many fronts. Think about the government AI supercomputers. NVIDIA is developing the chips, and then Supermicro created a new federal unit so that they can supply the government agencies with full data center IT solutions. But not everybody is convinced. For a long time now, Supermicro is one of the most shorted companies. The stock had more than 80 days when the share price moved more than 5% within the day. This high volatility is mostly caused by the high short interest. In 2025, the share price reached $60 several times, but then it also dropped around $30 several times this year. I don't understand why management is not doing anything about it, as this just makes it really difficult for investors to hold the stock long term. For trading, volatility is great, but not for long-term investors. They could do a simple share buyback, similar to what Palantir did when their share price was around $10 or $15. They have issued a 1 billion share buyback program back then. And funnily enough, they have only used around 120 million of that and have 880 million still open. Doing a share buyback in the 30s would make a lot of sense in Supermicro's case. They could create significant shareholder value. As of now, every weakness is amplified by the high ratio of shorts. Short interest increased significantly around the time they had their accounting issues and has stayed high since then. This makes sense, as shorts have realized that the company is not doing anything about it. I mean, their communication is really weak and inconsistent as well. But beyond everything else, this is also bad for the employees, as the options are potentially worth nothing if the share value stays low. And it also puts the company at disadvantage when they are hiring new employees. For several quarters now, their biggest problem is their declining margin. It dropped from around 17% in Q1 2024 to 11.8% in Q2 2025. This is the time when their revenue started to increase rapidly. And then, in this quarter, they have only delivered 9.5%. On top of that, they are projecting a 3% decline in the coming quarter, so they should be around 6.5%. The question is, if this is the bottom or not. If it is, and they can increase margins from here on, then things will look much better in a few quarters from now. But what can they do to increase their margins? For one, they have introduced their DCBBS solutions. These building blocks are margin accretive. They should deliver much higher margins than fitting out large data centers and only providing the racks. They claim that it will come with over 20% margin. But they just started to ramp up sales, and within their revenue mix, sales of these products is only marginal. But by Q4 2026, they would like DCBBS to be around 20 to 30% of their overall sales. The other option to increase margins is to focus on opportunities beyond the hyperscalers. The best opportunity going forward is to focus on neoclouds, sovereigns, and enterprise customers, because they need more overall support and margins are therefore much better. The challenge is convincing investors that the story is still on track, because when you guide high and then deliver low quarter after quarter, investors lose patience. At some point, Supermicro needs to flip the script and start surprising to the upside again. That would rebuild confidence and potentially stabilize the stock. Until then, the market will likely remain cautious. Thanks for watching, and please give it a like, subscribe, and watch another video. See you in the next one. Thank you. Bye.